Oh, we start this week on junk status following Moody's downgrade on Friday. The ratings agency cites the country's weak economy as the reason, saying business confidence and investment is weak. Now, all three major rating agencies have junked the country. What can we expect moving forward? Joining me now via Skype is Economist Mhlanganisi Madlongwana. Very good morning to you. So it is hardly a surprise, is it, that Moody's have finally stepped in along with the others, but it's the timing along with COVID-19 that makes it so shocking, I guess.
Hi, Jane. Yeah, it's been a bit of a crazy morning and a crazy couple of weeks, actually. The timing is not the best currently because we're dealing with a double whammy. And I was saying to someone yesterday, and this is my biggest worry for the South African economy, is that a lot of other economies have the right fundamentals in place. So do ours, but they don't have the right. We're going to be limping out of this challenge of the COVID-19. So you find yourself almost out of the frying pan into the fire, as it may. And so that's going to be the biggest challenge, is finding some sort of balance and trying to make sense of, one, dealing with a national health disaster, global health disaster actually, but also dealing with an economy that's ultimately really crippled by a lot of sort of fundamental and structural issues in place. And we're going to have to make some really hard decisions going forward.
I guess one positive to come out of this, I mean, it takes COVID-19 and the downgrading to say, all right, let's now embrace structural reform.
I think actually it should have been a conversation we should have had without being nudged, right? And in fact, what COVID-19 has only done is it sort of accelerated that sort of discussion. It's a discussion that South Africa should have been having for a while. We looked at our rising debt to GDP numbers, for instance. We're at 63 currently, predicted to go close to about 90 in the next 2 financial years, in 2023, 2022, 2023. And so those are all sort of real issues that we should have been thinking about ourselves already. We have been making murmurs about the debt, the public debt sort of wage bill as well. These are all sort of issues we have been having conversations about, but no real movement has been made. And I think also Moody's made reference to it, said you guys are making the right noises, but very limited action when it comes to that. We will be forced, unfortunately, to actually make decisions now more than ever. The interesting question is, can we bring all the relevant stakeholders into one room to have a conversation, but also more importantly, take those difficult decisions going forward? That's going to be interesting.
Approaching the IMF, is it time?
Oh, that's a tricky one, Jane, and it's a really difficult. It's a really difficult one, right? Because ultimately, once you approach the IMF, there are a lot of sovereign decisions that you just can't make as a country. The IMF usually looks at 3 sort of fundamentals. They look at monetary policy, they look at fiscal policy, but they also look at the structure of your economy. So one of the things that then, once you speak to the IMF, you also then enter political sort of management, because then you lose for the ANC at the very least, you lose sort of the bargaining relationship with Labour, which is something that our economy has always had, because once the IMF comes in, there are some sort of structural adjustment programs that they put together. The interesting one, for instance, is Egypt, where they slashed public spending, and that's most likely one of the biggest impact of structural adjustment programs in South Africa, right? We have quite a substantial sort of social impact or social net, and that's the first thing to go. And when that goes, that's usually way more painful for the most vulnerable people in South African society. So it's an interesting conversation. I think the Minister of Finance sat on a call with analysts and journalists last night post the Moody's sort of downgrade and spoke about a Vulindlela unit that's going to be geared in the finance ministry towards ensuring that we find a way to implement structural reforms. I am just worried that we're having that conversation only now, and we're not really sure which structural reforms we're going to implement, which was something we should have been doing on our own. The IMF is a tricky proposition. For me individually, I think it's a very tricky proposition, and it's a very difficult proposition to get out of once you get into bed with the IMF.
I'm just wondering what you make of the Africa Development Bank launching record-breaking social bonds. Is that going to help?
Bonds, importantly, are based on your rating, right, on your sovereign rating. And unfortunately, interestingly enough, we had a bond auction, I think, about on Wednesday or Thursday as a country, and we're going to be kicked out of the bond index. And that's going to happen towards the end of April as a country because all of our bonds are junk, right? And so what we actually saw is a net outflow of capitals because people are dumping South African bonds because they technically aren't worth anything based on the rating that has just been given by Moody's. So the AFDB and the IMF and these institutions that are actually holding bonds, and you'll see that a lot of mature economies around the globe are actually going on bond auctions currently because they need the liquidity to fight the COVID-19 pandemic more than anything else, but also stimulate the economy post that. We as a country don't have that leg room currently. We don't have the bond option anymore. We're not going to have it for a very long time based on these reforms. And I think, Jane, more than anything else, what needs to happen from sort of a finance point of view within South Africa is we really need a new budget. I genuinely think that the minister needs to draw up and present a new budget to South Africa, pricing in sort of these compromises that will have to be made, and so that South Africans understand the severity of the space we're in currently and how that's going to affect us going forward. I think it's an honest conversation that must be had long before we even try to make sense of what South Africa in the sort of future term looks like. And I think what's more important for me, and it's something that I try to look at when I look at these numbers, is that you're going to look at the South African economy as a continuum, right? The first and the most important one is the short-term impact of what it means for the South African economy to go into junk status. And that's largely sort of compounded by COVID-19. Is in the short term, you're going to see a bleeding of SMMEs, the small businesses that actually have been sort of operating from invoice to invoice on a monthly basis. Those guys are going to struggle quite substantially.
Yes, I was going to actually ask you about that. I mean, we know that a relief fund has been expedited in order to deal with the SMEs and the small business men and women. I mean, they are obviously crucial to keeping the economy churning. How is this going to work?
So I worry, and it's something I've been speaking to people about and just trying to mull over for a while now. So the first and the most important thing, Jane, is, as I was saying, is that in the short term, especially for SMMEs, that's going to be a very big struggle, largely because actually a lot of the South African economy is informal, and so that's going to be something that's going to be severely impacted, right? Because those people, firstly, are not geared up for the kind of support that actually government wants to give. If you look at the payee sort of cut from SARS and those kinds of concessions, a lot of those concessions are geared up for big business, and ultimately that's what's going to happen. And I worry that the structure of the South African economy is literally just going to entrench itself, where big business and oligopolies are going to survive tough economic times because they have the sort of necessary infrastructure in place to make use of the concessions that are given by government. But more importantly, in the medium term, what you then look at is even those businesses that have the relevant liquidity, but have also had long business challenges. There are some retail groups currently that we will see probably looking to business rescue because of the economic sort of climate that we're seeing currently. And so a lot of these must be looked at across an economic continuum, but also spectrum in the short term. In the medium term, the collapse of a lot of value chains. The South African economy has largely outsourced a lot of key capabilities, processing, manufacturing to China, and we saw these vulnerabilities now with the COVID-19. So when they say structural changes for business, it'll be largely big business, but also more importantly, I think this allows us an opportunity to actually have a real conversation about what it is we want our economy to look like going forward.
Wise words, Mhlanganisi. Very good to talk to you about the downgrading of Moody's and what sort of impact it's going to have on us from top to bottom.